What's up guys, welcome back to Joevestor Trades. As you can tell from the title and thumbnail, I lost a decent amount of money today, day trading Facebook. Although I hate talking about the loss, I do want to show you guys that day trading isn't always rainbows and sunshine, and you are going to have losing plays. Now I'm going to take you guys through the charts, show you my mistake with this play, and how you can avoid it yourself. If you go on to enjoy the video, make sure to give it a thumbs up and subscribe for more trading content. Now that we have Facebook pulled up on the chart, I'm going to take you guys through this play. And even though I hate showing my losing play, I think that some of you guys can learn from it and avoid the mistake that I made. So right here at the start of Facebook, we see it pushing up and looking pretty strong right at open. And then it reaches a high of 287 and then starts to sell off. So right here I'm eyeing Facebook because right here we see it gets rejected at the 9 EMA, but then finds support around the lower VWAP. And let me mark out this support level. So right here on this level and the lower VWAP, it bounces off pretty nicely, and then it trades sideways for a little bit and then pushes above the 9 EMA, which is this green line. And we can also see that the MACD is curling up. So right after this push above the 9 EMA, I was looking to go long on Facebook, and at 10:09 is when I bought my 2 contracts. And we can go to Robinhood, we see Facebook history, and if we go down, we'll see 2 hours ago at 10:09 I bought 2 contracts and my total was $630. Now keep in mind, today is Thursday and these contracts were expiring tomorrow. So given that fact, these contracts do have a high theta, and you should always look for a quick move when you're day trading on Thursday if the contracts are expiring the next day. So right here we see Facebook is trading sideways. It gets rejected on this 21 EMA, which can act as resistance if the stock is under it. And right here we see Facebook testing this support level I drew out. So right here, after Facebook closes below and then gets that next red candlestick, this is where I should have been out of the play for about $100 loss, give or take. But right here I see Facebook pushes back above support and forms this bullish engulfing candlestick. So right here we can see that this green candlestick covers the whole body of the last one, and that's a sign of reversal. But right here we still see it's kind of not pushing back above resistance and starts to trade down. So after I saw this bullish engulfing candlestick, this is where I averaged down on my position. And if we go over to Robinhood, we'll see that I bought 2 more contracts at 10.26 at an average cost of $239. My first average cost was $315. So instead of cutting my position, I added more after I saw a sign of reversal. And then if we go back to the chart, we'll see, as I said before, it doesn't quite get above the resistance and then starts to trade further down. And now I'm down about $400 or so on my position. And right around here, I look to cut. And I think I got out of my first contract. Let me draw it out. Right around this green candlestick on the push to 9 EMA, because I thought it was going to get rejected again and head further down. And if we go over to Robinhood, we can see that I sold 2 contracts for $1.92 at 10.36, which is right here on this green candlestick, the push to the 9 EMA. And then I was holding on to my last 2 contracts to see what Facebook would do next. And as it started to trade sideways a little bit, I was a bit hesitant that it would continue to fall even further. So right around this next candlestick at 10.39, I believe is when I closed my last 2 contracts. And if we go over to Robinhood, we can see I sold one for $1.71 at 10.38, and then I got out of my last one at 10.39, totaling a loss of about $378. And as we can see, right after I sold, Facebook pushed back above the 9 EMA, closed above the 21, and got rejected around the resistance, but later pushed back through, and these contracts were now green. So yeah, I did get unlucky selling right at the bottom, and It unfortunately sucks, but I should have cut my position originally back here after it fell beneath support. Now, given the fact that I have been pretty consistent with my trades over the past month, I was up $2,500, and a loss like this is just a reminder when you're trading that you can't get too comfortable and that you should always stick to your setup and rules that you set for yourself. So I hope you guys learned from this play and that you should always set a strict stop loss for yourself when you're trading. Having a stop loss in place can definitely save you in the long run from losing a lot of money. I don't really like to bag hold my contracts, and I got too comfortable as a trader over the past month, and this was just a reminder for me to get back on track and stick to my rules. And as I said before, these contracts were expiring tomorrow, and I should have kept that thought in my head, because with contracts expiring the next day, the theta can be very, very brutal. And right here, as I said, this was my entry at 10:09. As Facebook was trading sideways, I was just losing money already on my contract due to the high theta. So you want to be careful when you're trading next day expirations, and you want to get a quick move in your favor. This was just a lesson learned, and I hope you guys also learned from this as well. As you guys can see, setting a stop loss is very important, not only setting it, but also sticking to it. If you guys learned anything from this video, make sure to give it a thumbs up and subscribe. And if you want to be a part of a trading community with over 1,000+ members, make sure to check out the Discord channel in the description down below.